Welcome. Again, my name is Ted Posobiec. I want to welcome everyone here. I see we have people from all over U.S. and around the world here. Nice to have you all in. Thanks for coming in. So let's get started here. How to use volume spikes to forecast profitable trades. First off, let's get going here. If I can get my screen to switch here. Take a look at the disclaimer here. This is for educational purposes only. I'm not a financial advisor at all. Like Dan said, I am a full-time trader. 2 to 3 hours a day. Get pretty anxious if I have to go over that, but there are days that I do. But 2 to 3 hours is good. And I'm really finding out now that my trading is going a lot better after 10 o'clock. There's reasons for it. We do have summer here coming up on us. We're in it. Does anybody know what today is? What kind of news we have for today? Had Canadian info. My main thing is we're looking at the oil report. We'll get that later on today. But in saying that, what I want to caution you on that, whenever I see an oil day, oil inventory day, I look at a slow start in the morning. So I may trade that day a little different earlier in the morning, but we'll get into that. And for those that were coming in to see the time-based trades, we will get everyone out a link to come into that when we have that ready. From working with thousands of traders over the last few years, here's what I've learned. Most traders have no idea what to do with volume. Sure, they might know what volume is and how to read it on a chart, but they don't know what to do with it. If they did, I believe 85% of the traders would be successful rather than the other way around. Volume speaks loudly and it tells you what to do in most market situations, if you know how to listen. So today I'm going to teach you how to listen to volume and what to do with the information it tells you. This is not just theory. I'm going to give you a very particular trade that I take almost every day at the open. Once I show you this, you're going to have one of those aha moments that will forever change the way you look at the markets. So it's going to be, excuse me. I had another thought in my mind. Want everybody to make sure they have pencils and pens ready to write some of this stuff down. It's going to be so simple and crystal clear, you'll wonder why you've never noticed it before. But first, who am I? And why should you care what I have to say? I'm just a regular guy like anyone else. I was a commercial diver for 20 years. I worked in the Gulf of Mexico and around the world, diving, putting in oil platforms, putting in new pipelines, and doing major repairs. I like to ride motorcycles, as you can see. I collect guitars and I play a little bit too. I've been trading stocks for almost 18 years. Most important, I love the lifestyle that comes with being a day trader. When I was diving, working in the diving industry, I used to work 10 to 12 hours a day, 10 hours a day minimum if I worked on the beach, and 12 hours a day if I was working offshore. That is a minimum. Working offshore would be anywhere from 2 days to 6 to 8 months. I could be gone. Today, my idea of full-time is just 2 to 3 hours per day, and I get to focus what's important in my life. Guitars and motorcycles. I also host the E-mini Insider Trading Room at WINvesting.com. We start that on Monday through Friday at 8:15 to 10 Eastern time. A lot of times I have the room open up at 8 o'clock, but the official time starts at 8:15 and we run that to 10 a.m. Eastern time. Here's what one of my students had to say about me. Ted Posobiec is a phenomenal trader and coach. He is truly driven to help his students achieve their personal goals. I was treading water with my trading for a long time, taking one step forward and two steps back, but Ted has helped me turn that around by building on solid fundamentals. It's pretty amazing how quickly an account can grow when you're consistently profitable. Out of the last 20 trading days, I've had 2 losers, 2 break-even days, and 16 winners. My account is up over 50% in 30 days simply by cracking out base hits. Pretty exciting. Wouldn't have happened without Ted's help. Rick R. from Wisconsin. That's enough about me. So let's get back to volume and how it can predict profitable trade setups at the market open. But first, let's define what I mean by market open. Market open, the open of a market is the open outcry or regular trading hours. The market open is different for agriculture, energies, equities, interest rates, and metals, etc. You can take a look at the markets, what you like to trade at www.cmegroup.com trading hours. Take a look at it there. What you're going to find is that a lot of stuff has changed over the years. So agriculture, energies, equities will they have an open time, but energies, interest rates, and metals may not have an open time. But we use the same open times as what they did when they had a floor to open up on. And I'll talk a little bit about that here. Energies, CL, oil, natural gas, they open up at 9 o'clock. Equities, ES, YM, NQ. Is anybody trading TF now? Haven't looked at it much. I believe yesterday or this week it was supposed to run over back to CME, I believe. I'll have to take a look at that. But equities, not yet. I'm going to take a look at that. I want to take a look at that when we go through some of the stuff here. We'll see how that's going to play out with the volume spikes here. Like I say again, the ES, YM, NQ, they open up at 9:30. Interest rates, ZBs, mainly what I'm looking at for at 8:20 is metals. Gold is what I'll trade there. That opens up at 8:20s. Bonds opens up at 8:20s. So we have energies at 9. Let's do it this way. Metals at 8:20. That's the regular trading hours of it. Interest rates 8:20. Equities 9:30, and energies at 9 o'clock. So those are the hours that I'm going to be looking at. 8:20, 9, and 9:30. Volume in the open trade for a short. Here's how I interpret what volume is telling me. When I get a sharp increase in price and a sharp increase in volume, this can mean that the bulls have exhausted. All the buyers have bought and they are starting to step aside, and the sellers are now going to take over. This is a setup for a short entry. The Forex, you're talking the 6Es, 6Es, are 6C, those 8:20. I haven't traded those in a long time. Those would open up at 8:20. Volume in the open trade short, in other words, a big increase in price and a big increase in volume means that the market will probably drop, and I look for a short setup. Here's a sharp increase in price, is what I'm looking for, and a sharp increase in volume. The buyers are out and the sellers step in. I look for a short, and I'm looking for that short off this candle right here. I like to get in on the candle. I can't get in on the close of the candle, but I've tried to get in at the best price where I think it might go. And I'm always looking to the left to see if there's any support and resistance. When you come into the room, in my room, you'll see that I set up the charts, this chart here from midnight, and I look for support and resistance areas from midnight going forward. And I'd also take a look at yesterday's high-low. Open the volume and the open trade for a long setup. This is when I'm looking for a long setup. I look for a sharp decrease in price and a sharp increase in volume. This can mean that the sellers have exhausted. Now the sellers have stepped aside and the buyers have found value at that level, and they start to take control. No, Chris, it's not necessarily 100% change. We'll get into that. I'll go over that for you. This setup is for a long entry. Again, a sharp increase in price, or a decrease in price and an increase in volume is when I'm looking for a long entry. And I'll simplify that. A big decrease in price and a big increase in volume means that the market is probably going to take off, and I'm going to look for a long. Here's our sharp decrease in price. This is what I like to see with a sharp increase in volume. The sellers are out, buyers come in, and that's where I'm looking for a long. Here's a simple way to remember all of this. I'd grab a pencil here and write this down. If you have a pen, that'll work too. Up plus up equals down. A sharp increase in price plus a sharp increase in volume, look for a short. Down plus up equals up. A sharp increase in price, a sharp decrease in price, plus a sharp increase in volume, I'm looking for a long. Does everybody get that? I'm using a 1 minute chart. Yes, you can use a 5 minute chart on this. I know one of the guys I trade with and taught this method, he uses a 3 minute and a 5 minute chart. I don't have the 3 or 5 minute chart up. I'm looking at a 1 minute. That's my personal preference on it. Now you know what to look for. Let's take a look at some charts. I did not catch today's trade. I was looking at, somebody was having some problems this morning and I was helping them out. We'll take a look at CL. That opened up and it looks like I missed NQ. That's okay. Here we have this particular candle here. I'll open this up so we can see it a little better. Go over it for today. This particular candle ended up being a doji, but the price movement is bigger than the previous. This is the open candle, and this is where I'm looking for a long or a short. I could have taken this in either direction. When the volume came up, I was watching it as it went. Price came down, and it was red when the green arrow came up. That was the indication to go long. I'm looking for 3 to 5 ticks in this area here. So, and I don't use any more than a 7-tick stop. So this candle here, if I had taken a look at what was possibly behind us back here, I could have looked at an area here, and I believe it's right there for some resistance. And that's where I would have most likely liked to get in. If this closes at a doji, I'm not going to take it in either direction. If I'm not already in the trade, I'll stay away from it. I like to see some color in it before I take a trade. Spinning tops may or may not take it. If price came up here and it closed green, I'd look for this. I can't see how it would have closed green. Yeah, it could have closed green up here, then take it down. But it would have to be up at a support resistance area. Say this. You can see this, the indicator that I have here that are marking the candles here is a volume spike indicator that I had made for us that actually will put the arrow out as soon as volume comes in. When we take a look at this candle here, I have the indicator set for 200. So this is not going to throw off any signals if price is below 200. CL has been quite high lately. So anytime there's anything under 200 and the volume goes up, yeah, I see what you're getting at there, 100%. I have it set at, I want it to double. So if volume is at 1,000, and I'm only looking at the previous candle here, a volume candle. When I get that, and then I get this one here, I'm not looking back, but the indicator will look back. You can look back 10 candles, 100 candles, whatever you have it set up for. But what I need it to do is if it's at 1,000, it needs to go to 2,000. I want it doubled, so that I have it set at 100%. And you can adjust that however you want. If you want 200%, I'm looking for at least a double the amount of the move. The more, the better. What the indicator does is help identify the spikes. If I'm looking at the chart, I don't necessarily need a arrow come up because it might be under 200. So then it's not going to throw the signal out, the candle prior. Like right here at 919, it may not throw the signal out if it was under 200. If it was below the, if I set it at 1,000, then anything under 1,000, it wouldn't show any signals. So what I want it to do is I don't want to see these arrows up all the time, so I'll adjust the minimum amount of volume. Then I will go ahead and you have a volume spike. You'll see the big candle here on volume, but I'm also looking for that big decrease or increase in the candle itself. I'll take a spike off candles that don't necessarily come up with this. This here will help you learn what you're looking for. I'm looking for a candle like this. We get the sharp increase here. That one didn't work. That's close to, heck, that's at 4:30 Eastern time. Let's take a look at this one here. Kind of tried to do this one yesterday. It didn't work out too well. It didn't work out at all. But they all don't work. We have a volume spike after the open here come up, and it does get looks like it does get you at least 3 to 5 ticks. After 10 o'clock now, I will start using more contracts, possibly. It depends on where I'm at in the day. You can see several areas here. We're just talking about the open trades right now. CL is what I trade. Natural gas, your energies would open up at 9, Chris. Gold, I did not see gold. We'll go over that today. Here's one I started going back and doing some looking. We have a significant increase in price. And I'm looking at this candle here, and that volume right there, right in line there. I want to see what happens to the next candle. If this candle has a lot of volume and it's close to the same size as this candle here, I'll stay away from it. I want to see a jump and come down. If you had gotten into this trade, even at the close of the candle, you're looking at going back. It went back 3 ticks and it goes down for 22. Again, I'm a scalper. I'll go for 3, 5, 5, and 10 ticks, tick targets. Take a look at a couple more days here. If you have any questions, write them in here. There's a nice one. Again, I'll mark my charts up a little bit prior to the open and look for this day here. I circled it. Volume is quite high, but the candle size is it's almost the same. I don't get a real big move. A slow and sluggish start. That's the 7th. And volume, I did not get a significant increase in volume off this. So that I would not have taken as a volume spike. This one here, had you gotten in on this trade here, you possibly could have gotten 3 ticks and then you're out with a 7-tick stop. If I get 3 ticks, I would move my stop up to either break even or +1, so $40 would be it. If you got in, if at all possible, up a little higher, would it just get you another tick? I would count this trade as a possible losing trade because I'm not sure where I could have gotten in. I did not take this. I got this one. A little bit after, we get the volume spike. Look to the left, see if there's any support resistance, and look for the setup there. I have not looked at it on a daily chart. And I'm sure on a daily chart there, Ray, you're going to have a lot of volume because it gives you the whole volume for the day. 5-minute, 15-minute chart, you could possibly use it on that. But I know some guys that I've traded with use a 3 and a 5. Nice nice setups here. If you're trading in a trend, we'll go through that in the course on how to do that throughout the day. There's 3 different other trades to take off volume spikes. 2 other ones other than the opens here. Did not get a volume spike off the open here. Waited a couple minutes. If you got in on the close of the candle, it went back 6 ticks against you. With my 7 tick, I'd still in and possibly get, well, the 3 and a 5 tick, it definitely would have gotten on that. And we go to the 4th. Let's take a look at GC. Does anybody have any idea what caused this one? Somebody was speaking this morning. Helen. Yelling. Yeah, she was yelling it. That's what happened here. This trade here, I'll see if I can't get that a little bigger. Take a look at the candle. Are they almost the same size? If this one here, for me, watching it, it came down. I'm not concerned about the arrow. Sometimes you won't get the arrow above or below it, but I would be looking for. Let me go to the left here, see where we've got. I'm looking right here at this. Coming up here. Where this would be a news candle. Price came down. Would look for an area to get in here or here for that long side up. It goes all the way back up. Would have gotten at least a 3 and a 5 on that for a target for the short. Went down 7. So that was decent there. In the morning, probably a losing trade. Here we have one. We have a pretty wide range here just prior to the open. I like to see that for volume spikes. And when I have a range that's this wide, I'll look for reversals at the 5 minutes prior to the open. So this candle coming down here, this here's where I'd like to get in. And 5 and 3 are hit. Yeah, Scott. I like that. Huge spike. Those randoms, love them. Here's one, if you could have waited, and I don't wait, does go up 21 ticks, maybe a little more. get in on the close of the candle as close as possible. It does get you in, goes back a tick, and then runs its way up. So what do we have? We have a sharp decrease in price, sharp increase in volume, and we look for a long. There's our long. Look at it for support resistance areas. Again, take a look to the left. Look to the left, see what you have. See if there's a swing, overnight high, a yesterday's high or low, and try to get in at those areas there. Price likes to turn around at those areas there, especially coming in with some volume. There are times when you want to look at it, see if it's really ramming up hard. Use some MAs or momentum indicators. Might help you stay out of a trade or get into it. What you see here, I may on my other charts, I'll use a 9 EMA, a 21 EMA, and a 50 EMA. Maybe that'll help. I like to see volume spikes coming into those areas also. Open at the get in at the close of the candle, does go up 13 ticks, went back 4 ticks, but you're in it for quite a ways. Wait, you get some of these candles here. They are significant, pushing down. Then we get a real hard one to the downside to come back up. That was the 7th. Here's one that we get a big move in the morning. The significant move here, we get a pullback, come back in. I would not have gotten in on it on the close of the candle. It does come down, but that shoots up significantly higher. And I'm looking at this candle here. It doesn't give us a volume spike, but I would call it a volume spike. So I'm looking at this one here, and we get that's right at the just prior to the open. So I'm not going to take a volume spike. We don't get it here, and it would be this candle here. I would not take this here. I would have prior to the open. I could have taken this short. That one looks like I would be in it on the close of the candle. That's where I'd be looking for that one. For this, just prior to it, what do we have? We have a sharp increase in price and a sharp increase in volume. And I look for a short. Had several of them here. Let's take a look at NQ. I want to take a look at TF. Let's see if that's going up and up equal down, right, Chris? Not really a big significant price move. Does push down. I'd have a different trade set up here. I know I would have gone long. It would have gotten me in long. Let's put it that way. But it wouldn't have been a volume spike. go through a couple of these, and let's go to TF. For those that, how many used to trade TF before they swapped over to the ICE? I used to trade it. Volume spike down here. We had a significant move up here. Try to get in down here. We do go up. That's decent. I would not have gotten in on the close of the candle here. It's too much like a doji. It does work though. And I'm going for 2 to 4 points. 1 point is $20. That's 4 ticks. That one actually goes up 4 from the close. So possibly would have gotten could have gotten a 4 if it would have been filled. And I've been trading a little different on that lately, and I will be going back to that real quick. Significant decrease in price with a significant increase in volume. It goes down 1.5 points, shoots up for 20 3/4. Not a bad move. Definitely would have gotten my targets on that. I have this one set up with minimum 200 on the volume also, and I want to see 100% increase here. Here we have a significant increase in volume. No arrow because it's below 200. ES is the only one that I have, and I'm thinking about changing CL. I'll have to watch that a little bit more. CL keeps coming with higher volume. I might move that up to 500. Not really a significant amount of price movement. It is double. I would prefer to see it like this, but would not have taken that. That's earlier in the morning. A lot of my trades, 80% of the trades that I've taken in the last 2 days have been volume spikes, and they're the ones that have gotten me out of my hole. I'm up for the week here right now. It would be 80% of 963.75. 80% of that is what I've made off volume spike trades, not necessarily opens. Here's one that didn't work. It does go against you. So this here would be a losing trade. Everything is set up for the long, for the short. Significant increase in price, significant decrease in volume, or increase in volume, and it just goes the other way. Let's take a look at some TF. With the indicator still set up, I'd have to set it up for a workspace or a template for this. No volume spike, so I'll just look at it, see if I would go for a volume spike here, and this one did not work. Definitely. Maybe a point if you got in right at the top. That is a volume spike. I like volume spikes when it comes up to a double top, and it could, if it pierces a double top, because the reason why this isn't showing an arrow is because price is below 200. put a regular line here. See, at 205 is way below that 200. The volume has to be above 200. On TF, this is the first time I'm looking at it. So I could probably come in and readjust it. I'll look at this for 30 days. 200 on the volume right here. Not 200%, Chris. It's the amount of contracts, 200 contracts. And I would still go with double. It doesn't have to be exact. I mean, if it looks like it's starting to grow, that's where I'm trying to get in. I like it when it's 100%, but I'm using an eyeball on it. Before the indicator, I did this all by eye. So, especially if it's coming into some kind of support resistance. Give me a second here. Let's say, I'm going to see who asked the question, Ray. You can use the ATR, Ray. I'm just looking at it using my eye on it. That's something that when you go do your back testing, you will find what you're comfortable with. I don't like to have a volume. We got a volume spike right here. I don't like the volume, the candle, because actually it looks like it's even smaller than this one. It came in. So I would leave it alone. Now on a double top, let's just say this here. We have a price is going to come up and double up here. What I'll do is I'm going to have I'd have an order already. I'd have an order already out. Especially when I start seeing it grow. Or if it's maybe a news event or even an open trade of some kind, having it come out and we have price coming up here, I want to see the volume come in and then I'm going to slowly bring it up. And this is where I want it to do, or I'll put my sell order here, I'll bring it up, and I want to see, I'll bring it one tick below it, and what I'll do is let price go up and then drop it as soon as price pierces it, pierces the price, and then drop it. That's where I want to get in. But when I see a double top like this and price pierces through it, I'll hold off. I'm not going to drop it. It's still going to be here. I want to see what it does if it comes back a little bit. But if it shoots up again, I'm going to bring it up. I'll follow it up until I get taken in. I will do this twice on one candle. If it doesn't work the first time, I'll try it again as price goes up. On the second time, if I lose the second time on it, I'm done with that candle. I do not mind it piercing up here 1 or 2 ticks. I'll drop it in and then see if it comes down. The reason for that is most of the time a breakout will fail and then it goes. And I'm looking at the failure at the top, but I want to see volume coming into it. Does that clear that up for you, Ray? I hope that helped. I do like it to see them come up there. Double tops, equal tops. It just depends on where you're, where in the day you're looking at it. Is it at the extreme high or in the middle of something? This here on TF, we're getting a lot of, looks like I did. I was must have gone over this yesterday. Okay. No volume spike because we are under 200. It goes back 8. And then comes down for 32, depending on where you got in. 8 ticks. Still would not know what to use for a stop on this. So if I'm using my regular one, would have been a stop out, and then it falls down. But we do have the significant increase in price and a significant increase in volume. Take a look to see what's still left and possibly get in. I want to take a look at one more here. Decrease in price, and it goes up maybe 2-3 ticks of heat, and it goes up to 3 points. Would have gotten my first point, and then whatever at stop out at +0 somewhere. I'll look at that more. I need at least 30 days of working on that before I decide to take that again. Usually the candle will be double, Ray. Let's just say we're looking at this. And we get a volume spike here, which it looks pretty good. That looks like pretty decent. I'm not gonna go for that. If that volume spike was here, that's where I would be liking it more. But that volume spike would have to be 200. The thing is, it's not. This one here, I could take it off a candle like this. It is bigger than this one, so it doesn't necessarily have to be double. It's just what I've got. Especially if I have a support or resistance close to me, that would make the difference. But if it was the same, definitely the same size, give it 2 or 3 ticks bigger than what it is. It's not the preferred. I'd prefer it to be like this, much bigger, 5 ticks. But I'm doing it as I'm watching volume going. I'm watching a candle go, and as soon as it looks like it's bigger than the previous candle, I'm getting ready to take the trade. Hope that kind of cleared it up for you. Usually with NQ, YM, not significant here. They usually follow the same pattern on it. So going through one to the other, if you get a volume spike on one, you'll get it on the other. It just depends on which one does it first. So when you're looking at these, take a look at what market you like to trade and watch it on that. Don't watch a whole bunch of things at the same time. I do, and it's real confusing. A lot of times I don't even look to see what market I'm on because all my techniques work on the same thing. some of the last what I'm on, and I really have to go look at the top to see if I'm what market I'm in. Again, we're looking for a significant increase in price and an increase in volume to go short. This one closes at the doji. Unless I had gotten in on the trade here, up here, would not have taken that. Significant increase in price and an increase in volume, I go short. If I get a significant decrease in price and an increase in volume, I'm going long. It's just something that I, keep that in mind. And looking for support resistance areas. Go back and check it out. Here we have a beautiful candle to the downside. You can wait for the candle to close. Again, I'm going to try to get in down here if I can to go up. It only comes down a half a point and goes up for 3 1/4. So I know I would have gotten my 2 points, or a point and 2 point. That's what I'd be going for there. 1 to 2 point. So that's 4 and 8 tick, or I would go with a 8 and 12. For the most part, I'm going to keep it on the low side, 4 and 8 on ES. This one here, I would change my indicator to show that anything under 1,000. I don't want, otherwise you get way too many of the volume spikes come up on it, especially during the day. So I would readjust that to 1,000. Play with it, see where it fits best for you. We have a volume spike here. It is slightly bigger. At the close of the candle, comes down. Close of the candle. Point and 1/4, comes back a point. No more than a 7 tick stop. That's still good. It does go down to 2.5 points. Get 1 point out of it and maybe a half a point. So 1.5 points, I'd say, on that one. Somebody have a market they want to take a look at? ESYM. I don't know if we did YM. Nope, I don't believe so. If you're interested in looking at another market that I don't have up here, bonds is a little slower. So for volume spikes, I usually wait for after the market opens on the bonds. CL and gold, you want to go over some more of those? November soybean. I'd have to pull that one up. Hey, Bill, how you doing? Mike, you can take a look at that at the open at 3 in the morning. There is a move there. $6E. I would see. I don't trade the sixes. I would look at the gold and CL. The TF is the Russell 2000. It's an E-mini future. Thanks, Dan. Let's go back a little further than these. We had an early move right here. Looking at this, price is under 200, or volume is under 200 right here. I see the volume. There's your entry at the close. If you can't get in at the close, take a look here. Try to use that as a line. Comes right down to a flat area here, which is a like a ledge. Goes up 9 ticks. So 3 and 5 ticks are perfect for that. Tell me what you have to take this. Do you have a significant decrease in price? Do you have a significant increase in volume? And do you go long? Yes, on all accounts. Give you a little extra here. No arrow, it's under 200, so it didn't show up. I like these. I just put it in, otherwise anytime price comes up from at 100 or even 50, there's just too many arrows. Get used to using it. If you can use the indicator, use the indicator. For those that, I know there's a lot of people in here that already have it, adjust it around. I just keep mine standard at 200 for just about everything. It may need adjustments. I've had them put in so that I can move that. All the other indicators that I had found on volume spikes, with the problem that I had with it, it was all after the fact. When this one here actually shows it as it happens, and it will show it in both directions if it doubles. If you get a volume increased and it's telling you to go up, and wherever it goes up, it's doubled the what it was previous, and then it gives you the arrow to the downside. Say it hit 500, gives you an arrow to go up, and then it keeps going up and it hits 2000. It's going to get you an arrow to point down, and it does it as soon as it happens. That's what I like about this particular indicator. Not that I'm trying to sell the indicator, but that it helps identify what you're seeing. And again, can't stress it enough. Keep looking to the left. Have some lines marked out to the left, or use MAs. And it doesn't. To me, it doesn't really matter what MAs you use. Use what you are used to using already. Let's take a look at one more, and we'll go take a look at some. Here's another significant increase in price, increase in volume. There was a short setup, not necessarily at the open. Here's one you took a little heat going down, then it pops up, it goes up. Works very good, well on gold. Looks like I would have got stopped out on this. I still would have tried it again, even if it was the next candle down. This push down here, try to get in down here. More so if there's a support resistance. Bang, bang, and then try to go up. Again, looking for only 3 and 5 ticks. Got that. No more than a 7-tick stop. Goes down 3, you're safe there. Take a look at one more on the CL here, and then I'm gonna have to continue on. Keep your notes out. It looks like there's a real good lineup today. Take notes so when you get the videos again, you can go back over them. Here's another one that worked. It did work. Significant decrease in price, increase in volume. 4 ticks, so a 4 and a 1, $50. I say 4 and a 1 is because once I hit 3 ticks, I'm going to +1, no less than break even. I'm not going to let it turn around and come back. That's my scalping thing. Seems like every time when I start trying to personally try to go for 10, 15, and there are times of days and different occasions that I do run more than that. Now it's after 10 o'clock. There's certain news that I'll trade 3 contracts, 11 contracts, 6. Been doing a lot of those lately. I don't like doing 11, but if I have to, I will. All right. I hope you got something out of here. Just remember, sharp increase in price, sharp increase in volume. Look for a short. A sharp decrease in price with a sharp increase in volume. Look for a long. Keep in mind, use something for support resistance. Use MAs. Take a look at yesterday's high-low, overnight high-low. Any swings. Watch them come into those. Today I've shown you how to listen to volume and what to do with that information. But it's only the beginning. There's just not enough time in 1 hour to teach you everything I know about trading volume spikes. So I want to invite you to take a look at a 3-hour training I created on day trading with volume spikes. I spent a lot of time going over the nuances that can help make or break your trading. And I'm going to teach you 2 variations of the volume spike trades that will improve your daily results in the market. Introducing Volume Spiker, how to use volume spikes for forecasting profitable trades. In this online course, you'll get in-depth training on how to take these volume spike trades in multiple markets. Here's what you'll learn. 3 different spot volume spike trades to look for, how to use market replay to master these trades in simulation before going live, how to minimize your loss with an ATM stop, how to minimize your loss with ATM stops, and I always use an ATM stop, nuances of the trade that will help you reduce risk and increase profitability, second chance entries. Some of you might have caught some of those. I know there was at least one. Second chance entries to enter losing trades into, turning those losing trades into winners. Developing consistency, how to choose the right daily profit loss limit for you and build the habit to stick with them. And there's plenty of examples. When you register today, you'll get 3 of the following bonuses. The 610 trade, one of my favorite low risk, high reward trading strategies that occurs 3 to 4 times a week. A great complement to the WINvesting trade. Make an extra 20 to 50 ticks per trade. This is a $597 value. Bonus 2, 30 days in my E-mini insider trading room. Join me live in the trading room starting Monday from 8:15 to 10 a.m. Eastern time. That's 5:15 to 7 a.m. PT, Pacific time. Live trading on CL, GC, NQ, ZB, and more. Get personalized coaching in the room. This is a $199 value. And bonus 3, how to trade other people's money. Learn how to trade other people's money and stop risking your own hard-earned dollars. Discover the rabbit punch trade strategy for passing the test and getting funded. I've helped my students get funded for $30,000 accounts, and that is a $99 value. So how much is all this worth? Over the past few months, I made about $700 a week using the WINvesting trades. Now, again, Monday and Tuesday, I was in the hole. Those that were in the room, in my room in the morning, know that I was down for both days. And I came back between 10:15 and 11. Could be no later than 11:30. And right now I'm up 963.75. Yes, I was using more than 2 contracts on some of the trades, but these trades were done on 80% of them were done using volume spikes. So I've already exceeded my $700 for the week on that. And today I'll probably use a volume spike here also. That's about $2,800 a month in addition to my other trades. I have students making this, about $600 a week using these trades. If I priced the course at $2,500, it could easily pay for itself in a month. Add it all up, WINvesting online trading system, $2,500, 610 trading course, $597, 30 days in the E-mini insider trading room for $199, and how to trade other people's money. I really think that that's a real important one there. Trade somebody else's money before trading your own. $99, that's $3,395. However, even though this training package is well worth it, I'm not going to ask you for $339.95. Why? Because I want you to get a quicker return on your investment, your ROI. And I'm not going to ask you $597, which is what the WINvesting alone is priced on our website without any of the bonuses. If you sign up today, get the WINvesting on-demand trading course along with all its bonuses for $97. You can take a look at that or register now at www.winvesting.com Spiker. I'm so confident that you'll find success with the WINvesting trade. I'm going to take all the risk on me, backed by my 90-day, 100% no BS action guarantee. Take 90 days to study the online course, trade at least 1 day a week over the next 3 months using a WINvesting strategy taught in the course, starting with just $5,000 in real or simulated account. After 90 days, if you have not generated at least $1,000 in real or simulated profits, show us the proof you took the action and get a full refund, 100% of your investment in the course. Still on the fence? Maybe this will help you. I want to help you succeed. You'll learn a lot faster if I'm there with you to answer your questions and show you how I take trades in the live market. So if you're one of the first 15 people to sign up, fast action, first 15 only now. Double the trading room and get 60 days in my live E-mini insider trading room instead of the 30. You can register now here at www.winvesting.com/spiker. Here's what another one of my students had to say about my trading. Ted worked with me and I did exactly what he told me to do. Today I can say my trading and confidence are at a level I never thought I would achieve. Ted worked with me and I did exactly, oh, sorry, my cat just jumped in front of my screen. Successful trading can be a life changer, and I want to thank Ted Posobiec for changing my life. Rest nicely. Ninja, Matt. Ninja Trader. That's the platform I use. I can't promise this will change your life, but when you sign up, I'll do my best to help you become a consistently profitable trader like I've done for Russ and other students. So just for a few good days in the market will easily pay for the course itself. And with the personalized coaching, you'll get in the live trading room and my no BS guarantee. As long as you're in sim or trading other people's money, you've got nothing to lose, and gain an extra $600 to $700 per week. But don't delay because the clock is ticking. I do believe so there. Thanks, Nibley. Hope I pronounced your name right. Only the first 15 serious traders get the double time into the trading room on the fast action bonus. Again, only the first 15. Remember, when you sign up today, you get 3-hour WINvesting online course, the 610 trade course, and how to trade other people's money. Up to 60 days of my E-mini insider trading room, all for $97. Register now at www.winvesting.com/spiker. If you have any questions, write them in and see if I can answer them. You're welcome. Brandon. Yeah, it was sweet. Very good. Hope everybody got something out of the course today. Take notes, watch the video again, and if you sign up, come on into the room. One thing I do have the capability of is turning your mic on so you can actually ask your questions that way, more one-on-one, feel like you're right there with me. No, VK. unless you're talking of the sixes, 6Cs, that will that does work with the futures market. Anybody take the oil report? You're welcome. You're welcome. Back test it on your own. Don't take my word for it. You need to check it out for yourself. When you're doing your back testing, market replay, simulation, take notes. And when you start taking notes, you're going to start seeing different things. And things that you'll be surprised, why didn't you notice it before? I know I didn't take notes when I first started. I knew it all. And once I started taking notes and keeping track of everything, everything went very well. That's about all I have. Dan? Yes, Michael, you get all the information sent to you.